Is now almost 7.5% from its highs, but our next guest says this is a perfect opportunity to buy the dip. Joining us now, Dan Ives, Managing Director of Equity Research at Wedbush Securities. Multi-year rally, you say, Dan, so it doesn't really matter, I guess. Down 7.5% is as good a time as any. Would you wait for more weakness or just buy some now, buy more if it went down more? But you think there's more to come?
Yeah, I mean, we think tech stocks are up 10% plus going into year end. And, clearly from a Fed and rising yields and, even some of the debt ceiling issues in China, there's going to be lingering worries out there. But if I look at $2 trillion of digital transformation spend over the next decade on consumer and enterprise, I view it as a golden buying opportunity. And that's sort of been our thesis over the last, call it 18 months. When you have these periods of times of weakness, these are times to double down in cloud, cybersecurity, some of the big cap names like Apple and Microsoft, among others.
So the pandemic move that moved everything forward, made things happen even quicker for a lot of tech stocks. That's not a reason to maybe wait for more than the pullback that we've seen so far. This is a time to do it right now.
And it's a great question. I think you can't paint every company with the same brush. As much as poster childs like Zoom and some others, clearly they'll see more moderating growth. But if I look at cloud, we're only a third of the way through the shift to cloud. And that's what I almost call a fourth industrial revolution in terms of what we're seeing on cloud, cybersecurity, 5G, and other technologies. And that's why for anyone that has a multi-year horizon, we're going to go through these sort of white knuckle periods. But I continue to view this as a time to double down on tech. And I think ultimately just creates more opportunities to own the secular winners, as we've talked about.
So you can see the 5 that we have up right now. Just go ahead and buy those.
I mean, those are ones that to me, if I look out over the next 1 to 2 years, those are up meaningfully. Just because to some extent, I think as much as we could talk about a 10-bit move in the 10-year, I think the street's underestimating growth on some of these names by 10 to 15% over the next few years. In terms of cloud, cybersecurity, look at Apple in the midst of a super cycle. Palo Alto's been one on cybersecurity. I think it's a golden age for cybersecurity. Fortinet, Zscaler, and Palo, and DocuSign continues to be, along with Microsoft, our favorite cloud names. And that's why this is not time that we wave the white towel, we double down, been hand-holding clients, especially over the last few weeks. I view this as the time.